Welcome back, friends, back to the stock state. I'm an ex-financial advisor, and today we are going to be talking about FIII stock, which is merging with ELMS, an electric last mile solution company. So let's talk about the table of contents for today. Okay, I want to talk about first an update on my previous picks, a very quick run through, and then talk about what is FIII and its basic business model, what does it sell, and the basic information you need to know about this company. Then I'm going to talk about the previous and many bull cases for FIII stock. And lastly, I'm going to go through my plan to trade the stock as well as its price prediction. Alright, it's going to be a fun video, and let's get into it. And for my new viewers, subscribe, join the community of investors with a plan. And to everyone that's here, thank you very much. An early like button will really help out the channel and encourage me to put out more great content. Okay, let's jump straight into it. Okay, so some update of my previous picks, right? Okay, look at BFT. Okay, so BFT, right? BFT yesterday, yesterday was a horrible red day, okay, because people are actually profit taking before Christmas. So BFT was one of the few companies, right? That's still 4% and above, and it was up a little bit more before heavily getting rejected at the $15, $16 range. Okay, so it'll probably trade in this area for some time, and it might actually even fall below this range as well. So, and I would say again, anywhere below $14 is a buy. Okay, if anywhere here you wish to load up a little bit more of a small position to start building your position, you are able to do that as well. Okay, and an update on a previous last pick on my next hot sector video. Okay, 10 ETF. You see, 10 ETF, right, was a ETF which I picked out, a few months ago actually. So I picked it out, back when it was this timing, when it was around around $74 around there, and since then it has rallied, okay, all the way to $102 after yesterday's small pullback, okay, and it's up 34%. Okay, this is pretty good for a month trade without doing anything. You're not trading in and out of this, you're just buying and holding. It's a pretty good return actually. So to my subscribers who were with me in my earlier days, thank you very much. If you've seen this video, I'm really hope that you have actually take a look at this ETF itself. And this ETF, basically top 10 holdings are Enphase, SEDG, FSLR, Jinko Solar, all these kind of stocks. And I remember I talked in that video, I will actually choose a few of these companies to invest in, because this ETF has a pretty high expense ratio. And the company which I actually chose, one of them was actually SEDG. Okay, after this huge drop because of its earnings, if I'm not wrong. Okay, so look at this, right? Okay, I bought in at around this area. Okay, look at this. I bought in around. Okay, it got heavily rejected. I was too afraid to buy here because it's a falling knife. So I waited for a small consolidation around this area, 231. And since then, it has run up all the way to 330. So it's around 50% increase. Okay, so I'm also quite satisfied with that. Okay, so please go check out this, because I still do believe that this energy sector is going to get hot, in the coming years to come, because everyone is transitioning towards clean energy, and clean energy is going to be really the next big industry that's going to prosper. Okay, yes, so let's jump straight back into the video itself. Okay, so what is the bull case, right, for FIII or ELMS? Okay, so ELMS, right? Okay, the company itself. Okay, what is it doing? Okay, it's actually building an electric van. Okay, that has been based on this Socon vehicle. Okay, that has been on the list on the Shanghai Exchange. Okay, it has been sold across Asia, and it's been a very good selling delivery van in China. So they already have this model that's already been tried out in China, and it's been really popular. A lot of people actually buy into this type of vehicles. So ELMS, okay, they are actually producing a model that's really based on this Socon model that's already been sold. So they believe that by doing this, there's a high chance of it being successful again in the European countries, in the US. Okay, and looking at this company, right? Okay, it reminds me a lot of RIDE, which is Lordstown Motors. Okay, I'll explain to you a little bit more why. Because okay, firstly, it's talking about there's a short lead time to launch in Q3 2021. Okay, there's a plant in Indiana that's retrofitted for EV production. Okay, and vehicle and plant is 90% ready for the US productions. So you can see that they already have a plant. Okay, a bit similar to RIDE. Okay, they have a plant and they are ready to make the vehicles themselves and ready to sell. Okay, so they have already all the facilities that are ready. They just need the sales to come in, and they just need to sell the products to the open market. Okay, and another reason, why I feel like this is such a bullish case, right? You can see that they said that they already had 30,000 pre-orders and strong customer demand from all these big companies. Best Buy, everybody knows Best Buy. Okay, Walmart. Okay, FedEx. Okay, some companies that I don't really heard of, like Merchants Fleet. Okay, but you get what I mean. Okay, they have a lot of strong companies that are behind them, and they already have 30,000 plus pre-orders. Okay, very similar to RIDE. Okay, when you see RIDE, right? Okay, let me just check it out again. RIDE. Okay, RIDE was, again, you see, downtrending for a lot of time after the SPAC bubble burst, right? Okay, but however, since they announced again how many pre-orders they have, which is around 50,000, right? It just spiked up all the way, 71% up, all the way to the $26, $27. So you can see that they are very, very similar, okay, in the sense they are very, very similar. These two companies, I can see these similarities between, and I think the market haven't really picked this out yet. Okay, but I do have to warn, that, there is they are not really profitable yet, okay, as with a lot of EV companies that are out there, okay, so most of the time, okay, they are being said, their cash flow will be negative, okay, they won't be earning any revenue after minusing its costs, okay, until, 2023, then they will start to get a little bit more profitable, then they will start to get more profitable in 2024, 2025, will be much more revenue in, then there will be exponential growth from there, okay, like a lot of the companies they claim. So it is still a very speculative play, okay? There's no revenue coming in, so honestly, you have to position size for this company. Okay, yeah. So so how does it compare with all the other like EV companies, right? There's so many, there's PIC, there's RIDE, there's hyln, there is so many, right? Okay, but this is a very, very nice chart, that I put together, which helped me understand how different they are from the other EV companies that is offering their vehicles. Okay, so you can see that hyln, is a conversion company, FIII is a conversion company, like Monoscreen Powder is a conversion company, okay, because hyln is converting the combustion vehicles to a semi-electric vehicle using their hybrid conversion system. Okay, then plus 8 and 4 to 8, okay, is Nicholas, Tesla Semi, okay, those are very, very heavy hitting trucks, or trucks that bring very, very heavy loads. Okay, so the higher the class, right, the more load that it can actually cover or bring. So Nicholas and Tesla Semi is in class 4 to 8. Okay, class 3 is ELMS, okay, one of the class 3s. Okay, and Workhorse is also in class 3. Amazon Rivian is in class 3. Ford is in class 2. Canoe is in class 2, okay, and they said the Urban Delivery Van 2021 is actually in the only EV in class 1. Okay, pickup trucks are RIDE, right, okay, and Tesla Cybertruck. Okay, so they claim to be the only EV class 1 vehicle that's out there. Okay, so assuming that what they say is true, okay, so I can see that they have a huge differentiation, and if they are able to move fast, they will have the first movers advantage before other companies try to jump on this bandwagon over here. Okay, and you can see that having an EV does not make it a sure buy, because it must be cheaper. It must work. It must be cheaper for people to convert. Okay, unless the government forces you to. But however, if it's cheaper, it's better. So based on what they are saying, okay, they are actually they have the total lowest cost of ownership. Okay, we can see that from here, right. After calculating all the numbers, right, the miles per hour and maintenance and everything, okay, but they're squeezing quite tightly, okay, they're talking about maintenance being the lowest. I think this is one of their biggest driving factors, okay, energy cost savings, okay, lower. So it squeeze all the way, okay, they are around 10 cents per 100 miles, okay, compared to others is like 14 cents to 21 cents, okay, which is a lot, you compound the amount of miles, right, so 21 cents is actually times 2 or twice the size of, the cost of the electric vehicle that they are offering. So this is actually, their selling point. So if they are actually, what they're saying is actually true, okay, I can see a lot of people actually converting to ELMS. And if they have the first mover's advantage, and gain a brand for themselves, I can see this company being a leader in this segment in the future years. Okay, and last, you talk about ELMS disruptive and integrating upfitting model. Okay, so normally, these kind of companies, they produce the truck, right? It's like a cookie cutter truck. So we produce this truck, this kind of truck, right, and it's fitted this way, okay, then you sell to you, you do whatever you want with it. Okay, but for them, right, they try to make it more customizable. Okay, there's customer orders, and they'll actually upfitting and integrated into assembly line, and the end of the line they'll actually retrofit all these kind of demands from the customer, right, and design them, complete the vehicle to customer specs without the need for second stage. So they just all the way in their plant itself, right, they already outfitted everything according to the customer's needs, and they will just send it directly there without having to sell it to them. Then they have to go and send it for refitting, then they'll send it back to them. So it's less hassle for the customer and builds a brand for them, gets more customer loyalty, and reduces cost for both sides. Okay, so this is also a very, very bullish point that I'm seeing from this company. They're trying to differentiate themselves. Okay, so let's talk about a little bit more about valuations. Okay, valuations wise, okay, it's comparing themselves against Fisker, Hyln, Lordstown, Workhorse, all the very, very popular names, NIO out there, Tesla, Arrival. Okay, but I would say, okay, do take this with a pinch of salt, because honestly, okay, all of these are based on future revenue growth. Okay, 2023, 2024, 2025, they are all projecting against future revenue growth, because most of these companies out here, okay, are not really profitable yet. So they only have to talk about future revenue. So future revenue, anything can happen. You can claim that you are the cheapest now, but next time you never know what's going to happen. But based on what they're saying, okay, their calculations, they are the cheapest out there. But that is also again SPAC merger, or in a sense, in the traditional terms, pre-IPO. So definitely their valuations will be cheaper before all the big institutions starts buying in, a lot of the retail investors starts buying in, and it will start to bump up, and its valuations will rise to the top. So at this price point, right, okay, we look at FIII, right, $14 right now, right, okay, I would say it has still more room to run. It's still in its early stages. So if you want to load up right now before its valuation gets huge, right, okay, you should start to load up a little bit more if you are more comfortable. Again, this is not really financial advice, honestly, because everyone's risk management is different. Okay, you may be willing to take more of a risk, so you might want to put more. But if you're not willing to take more risk, okay, I would say don't step into this kind of speculative place, because you might get burned. Because if you don't set a very tight stop loss, or very, very tight monitoring of these companies from a day to day. Okay, and yeah, lastly, I'll talk about my plan. Okay, what am I going to do? So basically, for my plan itself, right, I am going to load up heavy whenever it goes below $30. Okay, and load up a little bit when it goes below $14. Okay, so this company, right, I actually have started a small position when it was in the $11 around here. Okay, when it's around here, right, I actually loaded up a little bit. Okay, very small position. Okay, very small position here. But however, because at that point of time, I wasn't really confident that the specs could come up again. Okay, and then when it rose up to around 12, right, I loaded a bit more. Then it came up. Then it just tanked all the way again. Then I just kind of rolled up because I'm holding the stock itself, so I'm not really too concerned because I'm not playing options. So it just recently popped all the way up here and slowly got rejected yesterday all the way to $14. So okay, this is a very typical kind of a price movement, pre-merger date arrival, pre-merger date announcement, because what's going to happen is it's going to go up and down, up and down, up and down until an announcement comes, the date like, we are merging in Q1. Okay, so we're going to merge sometime in Q1. Okay, I'm going to merge in Q1, let's say February 12th, or that is when the thing will spike up and you will crash down a little bit and you will go up higher again. So my plan, right, okay, I'm loaded up whenever it goes to $13 and load up a little when it goes below $14. And if it's placed out the other EV specs, right, especially like the similar ones like RIDE, right, I can easily seeing running to $20, okay, and if it's very bullish to $30, okay, and if it's super ultra bullish, $40, okay. So honestly, this is my price prediction, okay. Honestly, price predictions are just fun to do, okay. Never really take it as a hard rule. That means it must run to 20, it must run to 30, okay. Always look at price action, okay. If let's see, right. Okay, so if it runs up here, right, you cannot have this. Okay, the price predictions are fun to do because we know, like, there's a guide, it'll run to $20. I think it'll run to 30. But however, if the price action starts getting weak around here, it starts crashing. Okay, then it starts crashing a lot, right? Then you must question yourself. Okay, you must revise your price targets, because honestly, there's no point in blindly thinking that it will run to a certain number. Okay, it's more of monitoring the price action, but from what I'm seeing right now and from the information that I have, I can see this honestly very easily running into the $20 range and the $30 range. So anything around here, I will load up, okay? But disclaimer around here, okay, word of warning, okay, this is a speculative play because they're not profitable, and this kind of specs, they are crazy. Okay, so do position size. Okay, do not put your whole portfolio into this. Please do not put your own portfolio into this. I will not put my own portfolio into this. My whole portfolio into this is just a way for me to, play these kind of swinging trades and this hype behind the stocks. And, there's plenty of other specs which has a lot of upside as well. So I would say, diversify between your swing trades as well. Okay? If you put everything in one spec place, right, you will kill yourself, or you will really beat yourself up if this swing trade was trash and you see other swing trades, getting 40-50% increase. Okay, I would say spread out. So, in case one is trash, right, okay, you have a high chance of, a few others actually popping off to cover your loss, if you get what I'm saying. So in a sense, there's also diversification in this swing trades itself. Okay, and yeah, most of my plan is probably going to sell before the merger in Q1 because after the Q1, it will actually, most of the time, it will crash down unless you're a PIC. But yeah, but yep, that's it for today, guys. I really hope you like this video. A lot of research has been done into this video, to give you my thesis, and I really hope you smash that thumbs up button and subscribe to the channel for more videos like this. And I hope you guys have a very nice, happy holiday, and I'll see you in the next video. Stock and stay up.